Hey guys, so XQQI from NEOS and TDAQ have both been out for a little bit now. XQQI has been out for 3 months. I thought the time would be perfect to kind of check in on them and see how these leveraged funds have been doing, not only compared to the funds that they're leveraged from, but the market in general in terms of price return and total return. I was excited when these were coming out, but leverage, is a double-edged sword, so can help us on the way up, can definitely hurt us on the way down if we have a prolonged bear market. So since inception of XQQI, we actually had a little bit of a dip in the market up until March 30th, and then we have been on an absolute rally since then. So I'm definitely looking forward to seeing how these funds have done in a little bit of a down market and now a very bullish market. So the funds that these are written after would be QQQI through NEOS, and then Tap Alpha's TDAQ fund. So XQQI is leverage, they've said up to 150%, whereas TDAQ, they said they wanted to keep the leverage at about 130% from what I've read on their prospectus. So these are two different covered call strategies, whereas NEOS usually writes their covered calls a month to a month and a half out and then rolls those calls. Tap Alpha is actually doing a 0 DTE strategy where those call options will be expiring later that day, which may be a good thing. They may be able to adjust more accordingly on the downswing and the uptrend, which is what we may see here. But I'm curious to jump into the numbers. So first, let's just check out price return. So on a price return basis, we have QQQI with 5.59%, and then XQQI not much higher, 5.75%. Whereas over that same period, this is from inception of XQQI, about a little over 3 months ago. The Qs, in terms of price return, are up 15%. TDAX and TDAQ seem to keep up a little better in terms of price return, at least over the past 3 months. So TDAX is actually, in terms of price return, up a little more than TDAQ at 10.48, and then TDAX up 10.44. So good thing is, none of these funds across the board are losing any value in terms of price. That's only half the picture. You want to look at total return, which is what you would get if you reinvested all the dividends that have been distributed during this time period. So in terms of total return, QQQI at 9.38%. The leverage fund should, in theory, be a little bit higher than that, especially with the rally that we've had. So XQQI is actually about 13.27%. So not too bad considering over that time the Qs returned about 15.51%. So we're getting more of that upside with the leveraged fund. We're not really keeping up with the covered calls. We're losing a little bit. It's very hard to keep up with the underlying because we are selling that upside. So over the past few weeks, the market has just been straight up. So when we're writing those long covered calls, we're losing a little bit of that upside, in a more flat market or a slightly uptrending market. I would expect that to be a whole lot closer. Now Tap Alpha with the 0 DTE, they've done really good. TDAX is actually up 15.27%, so almost keeping up with the index. And then TDAX, surprisingly, has actually outperformed the Qs at 17.36%, which is surprising. It's done really well. Hopefully they can continue their outperformance in the long run. I would think in a slightly bullish market, not really a violently uptrending market. I think Tap Alpha should be able to keep up in some capacity, which is great. All of these funds offer pretty good return of capital. So I like that a lot. I think, when you're thinking about these, should you have one, the other, or both? I think they're both great for different reasons. I like the longer call options with NEOS. I like the 0 DTE. I think diversification is a good thing. If we look back at the price return of these funds, leveraged versus non-leveraged, on March 30th, that was kind of max pain for the little sell-off that we'd had in the market. And if we look at the leveraged funds, they're down quite a bit more. The Qs they were only down 9.43%. The leveraged fund, TDAX, was down 15% almost. TDAQ, it was down slightly more than the market during that period. And then if we're looking at the XQQI, it was also down about 15%, whereas QQQI, it was only down about 10%. So on those deep drawdowns, in terms of price return, the non-leveraged funds do a little better in terms of total return. If we look at March 30th, QQQI and TDAQ were actually down less than the overall market by a healthy margin, which is good to see. On the way down, those covered calls should help. We're collecting that premium. So on March 30th, we're looking at the Qs. The Qs were down, 9%, whereas QQQI was only down 7.94 and TDAQ was only down 8.18. So QQQI seems to keep a little in terms of total return on the downside. So, Tap Alpha seems to be a little bit more aggressive. They're getting quite a bit more of the upside. And then the downside's almost neck and neck. I'm very pleased with what Tap Alpha has done. I do not own any Tap Alpha funds. I do not own any of the leverage funds at this point. They're a little bit too new. I know some of the Canadian leveraged covered call funds have done absolutely phenomenal over the last few years. So I do expect these funds to be ones to watch. I do expect them in the future to do really well. I think if you're in this space, you want that income, you want that return of capital. Selling shares may, either you don't want to do it, or you're kind of worried about, selling off a portion of your portfolio, whereas, the covered call ETF basket allows you to keep all your shares, reinvest some. I do think with the leverage funds, I would definitely be looking to reinvest some. I think I may go into these in the future if they continue to outperform, especially if Tap Alpha does a good job of outperforming over the next year. So I think 3 months is not a really long time horizon to see how these funds will do. I think XQQI will do better in a more flat market to slight uptrending. I think this significant rip in the stock market to the upside has kind of slowed that down a little bit and allowed Tap Alpha to get out a little bit to the head. So I want to see how these do over the next year. I'm hopeful they both continue to do well. If either of them outperform the market, I think there'd be a very strong case to add these to anyone's portfolio, especially if you're looking for return of capital. Don't want to sell your shares and have long-term capital gains. If you're in a very high tax bracket at the moment and you're worried about taxes, I think the return of capital could be phenomenal. So anyway, guys, let me know what you think. Have you picked up any of these? I know a lot of people in the comments have been talking about their new return of capital funds from Goldman Sachs. So I may cover those next. Those are a little newer as well. I like to try to give a fund, a year before I consider investing in it. But I do think if Tap Alpha continues, especially during this historic, bull rally we're having, to outperform, I may consider adding that to my portfolio. As always, this is not financial advice, but leave me a comment, subscribe, and I'm looking forward to seeing you guys in the next video. Take care.